Good morning, friends. I am Ramchandra and you are watching Prayas, a channel which is fully dedicated for development of your personality. When I talk of personality, financial intelligence is integral part of it. Financial literacy is important element of your personality. Friend, in the previous video, I discussed how you can achieve financial freedom even before becoming 35 years of age. In that video, I discussed that you have to invest your money prudently to achieve that. Friend, in today's video, I am going to discuss what you should know before you invest. Today I am going to discuss with you 5 important things which you must know and understand well before you embark upon journey of investment to become financially free at the earliest. And friend, at the end of this video, I am going to give you $1 million tip, which is the most important part of this video. Therefore, I would request you to please be with me throughout this video so that you can get this tip and work on that. Friend, in case you find that this video is useful, please share this video with others, like it, and subscribe to this channel if you have not done so far, because I am going to come with one very powerful video every week which will transform your personality. Now, friend, let us discuss what are those 5 important things which you must know. But before I discuss that, let us review the current scenario of investment in our country, in India. Friend, the population of India is 142 crore. But you will be surprised to know that only 17 crore people invest in other than FDs and other asset, non-share market assets. We have got almost 20 crore demat account, but most of them are inactive. I myself has a demat account, my wife also has it, but I rarely use it. And third very surprising fact which you will come to know is that people don't stay in share market. If 100 people start SIP, by the end of third year only 17 people are left, other leave it. If you see the end of the 5th year, only 3 people are left, only 3%. 97% people disappear. Today, the amount invested in mutual fund and other share market instrument is hardly 1/3 of the fixed deposits amount. A very important question, why it is so? Why even after multiple advertisement by SEBI and other people that mutual fund is sahi hai, why investment climate is not picking up? The bare fact is that a common investor is afraid of share market. It suspects that its saving will disappear. He will lose it if he goes to share market. This is because of lack of financial literacy. This is because of lack of financial intelligence. So today's video is going to remove this type of confusion in the mind of the viewers. This is not true. Now, before I start discussing those 5 points, there are 2 disclaimers. The first disclaimer is This video is not for experts. This video is for a common investor, a common man who resides in villages, towns, small cities, and even in metros. And second thing, this video will be of no use to you if you leave this video in between. Unless you see this video fully, you will not be benefited. So if you are opening the video, please see it to the end. Of course, you can give your comment in the comment box what you feel about it. Now friend, let us discuss those important 5 things which you must know. First thing, you should know that if you are putting money in somewhere in bank or share market, it gets invested directly or indirectly in a business which is commercial in nature. It is for profit. If you put your money in fixed deposit, bank gives you interest on that. Then they loan that amount to some business, then take interest from that party which is much more higher than what they pay you. So this difference between interest taken from business entity and the interest paid to you is the profit of the bank, margin available to bank, and out of this margin only they spend all their running expenses, etc., and they earn profit. So ultimately you are investing in business. And if you are directly investing in equity, then of course you are investing in business. If you are investing in mutual fund, through them also it is going to business. So you must understand what is business and what important aspect of business you must know. First thing, business means what? Business means a commercial entity, commercial operation which produce some product or service which is badly needed by customers, and they are ready to pay the price at which it becomes financially viable. If they are not ready to pay the price which will make it profitable, it is commercially not feasible, financially not viable. This is number 1. Number 2, the business requires capital. Without money it cannot run. Capital can be risk capital, that is equity, it can be debt. And whatever instrument you see in the market, whether share capital, an equity share, preference share, debenture, bonds, mutual fund, etc., they are all derivatives of these 2 things, that is equity and debt. A combination of it. Number 3, the return on equity can be magnified with the help of debt. How it happens? If a business entity takes loan or it issues bond or debenture, it will pay interest on that or coupon rate on that. So whatever expenses is incurred during the financial year on this element is a cost to the business operation. It is treated as a cost for the purpose of income tax paid by that business entity. Now let us assume that you have taken loan at the rate of 10%, or the coupon rate is 10% of your debenture. Now if the corporate tax is 25%, that means this much benefit you will get in that because it is deducted. So the real rate of interest for the company is, cost to the company is 7.5%, not 10%. Now this 2.5% what you have saved is going to benefit whom? Obviously it is going to benefit the equity holders who are the owners, and their rate of return will be magnified. That means if the overall rate of return on capital employed is say 15%, the markup from debt side will be 7.5. So this 7.5% will get added in a weighted average on the equity shareholder, and their rate of return will be much more than 15%. This is called trading on equity. Next thing you must understand, in context of business, every business has some risk of failure. You know that out of 10 startups, 9 are failing. Only 1 succeed. There are so many reasons for failures. I am not going to discuss in this video. But this is the type of risk. So a person who wants to establish business must be a risk taker, a calculator of risk. This risk is not only in the business risk, it can be equity capital is also a risk capital, because the business risk gets tagged to the equity shares. Next thing you must understand is that every business has a growth cycle, business cycle. When you start a business, it remains in loss for a pretty long time. Then it break evens. Then it migrates to profit zone. Then it starts growing. Then it matures. Then it starts declining. So the business cycle involves growth phase, stagnation phase, and decline phase. In growth phase, there are so many sub-sections, So initially it will grow very, very slow because it will fight with the market. Then it will pick up and pick up and pick up and become faster and faster. Then a time will come when it will taper down and then decline. So you must understand the cycle will remain everywhere. So these are certain important aspects which you should know about a business before you start investing. Now the second important concept is, what is share market? What is its nature? Share market is just like a vegetable market. More vegetable, less money, price goes down. Less vegetable, more money, price goes up. Less share of good company, price up. More share of good company, price down. A event happens which is adversely affecting economy, down. Money is withdrawn by investors, down. Money is kept in the market, up. So up and down is the nature of share market. And it is very difficult to time the market. When I should invest, when I should exit. That's why SIP is the best option. Because when market is down, you get more unit. If it is up, you get less unit. Overall balancing out takes place. So you should not worry about up and down of the market, because it is its fundamental nature. Bull and bear run will be there. You can't control it. Third thing you should know, what is power of Indian economy? Is it a growth economy, declining economy? As Mr. Trump has said that India is a dead economy. I don't know what economics he has read and from where. But India is a very, very fast growing economy of the world. What is the reason? You must understand what is the fundamental of economic growth, economic development. If a GDP of a country has to grow faster, whatever service and product it is manufacturing, or producing, or trading, must have a demand, and demand must grow, whether domestic or international. Then the economy will grow. If there is a demand, there is a market, there are customers, money will chase the market, money will come automatically, saving will be coming, investment will be coming. If you want to understand the economics of India, you must know the economic distribution. You will be surprised to know that only 1% population holds 50% of the wealth and 22% of the income. But bottom 50%, that means almost 72 crore people, are only 15% and hold asset worth only 3%. This is the type of disparity. So, bottom of the pyramid, 70, 80, 90 crore people are not real consumer, but they are migrating to middle class slowly and slowly because of certain initiative by Government of India and people themselves. The government is working on entrepreneurship, startup culture, ease of doing business, so many incentives, loan schemes, and all those things they are doing. Training and everything, skill development, so many things are taking place. One product, one district, and so many things are going on simultaneously. So, the more and more people migrate towards middle class, the consumer base will expand, demand will expand, and once the demand expands, automatically the business will do better. Now, you must understand that Indian economy is the growth economy, it is a gold economy. So you should not be afraid. Next thing you should know that inflation is something which you cannot ignore. You were buying potato at what rate 5 years before? What you are buying today? Take any commodity. What has been the inflation rate? So the value of money is going down day by day. So if you put your money only in bank deposit, perhaps you will not be able to beat inflation. And if you cannot beat inflation, you cannot become financially free. You cannot support your life standard of living. It will deteriorate. So you must be able to beat inflation, which is a reality, and that is only possible by investing in mutual fund or other growth funds, so that you can beat it. And last but not the least, you must have a prudent advisor. You should take advice and act on that. So friend, in nutshell, I have discussed these 5 points. You must understand business. You must understand the power of economy. You must understand the share market. You must understand the impact of inflation. So, if you understand all these 5 aspects, perhaps you need not worry. Your fear will disappear. But, friend, I have discussed you and promised to you that I am going to give you $1 million tip. That is a tip which will undo everything what I have discussed so far. The tip is that if your own personality is defective, if it is weak, you cannot achieve financial freedom whatever you do. There are 3 things which you must mark. Number 1, do you have discipline in life? I told you that only 3% people retain their SIP after 5 years. They run away. They don't save regularly. So you must develop a discipline of saving. And the formula is not income minus expenditure is equal to saving. The formula is income minus saving is equal to expenditure. First you save a part of your earning, whatever you can save, little or more or whatever, save it, invest it prudently. And whatever remains, in that you manage your life the way you can manage. Have some pain. There is no gain without pain. You cannot become financially free unless you face some hardship. So, number 1, if you are not disciplined, you cannot achieve financial freedom. Forget about it. Number 2, you should be patient. You should have patience in you. You must stay invested long time. You must be investor, not a speculator. So you must wait. Market has gone down, gone up, gone down, gone up. Don't bother. Just go on investing. Forget about it. You will see after some time that you are out of the misery of money. You are totally free. And the third and very important, you must not be greedy. People are defrauding people by giving them the greed of high return. If you want to earn 50% per year, 4%, 5% per month, you are living in fool's paradise. Nobody can give you return more than 16%. And if you can earn 13-14%, you must be happy because you are beating inflation and you will become financially free. Why you are in a hurry? So friend, these three aspects of your personality you must watch out. And that's why we have launched this channel. This makes your personality solid, effective and strong. Friend, before I part, I must confess that health is wealth. Unless you take care of your health, whether mental or physical, you cannot achieve anything. You cannot become financially free. Your income will not grow. Of course, I have discussed many things in our previous video, which you can again see if you want. But you must be taking care of your health. And number two, you must improve your personality each and every day, so that your value increases, you become more valuable. Your income will increase. Unless you increase your income, active income, you cannot become financially free. So friend, I hope that whatever I have discussed has made some sense with you, and you are going to share, like this video and subscribe to this channel if you have not done so far. Friend, thank you very much for being with me such a long time, and I hope that you are going to see my next video, which I am going to come on mutual fund exclusively, because that is the fund which is for common man. It is not for expert, and it is a safe instrument. So please watch out for that video which will come after this video. Thank you very much.